Good evening and welcome to your in-depth market analysis for June 15th, 2025. Global financial markets have been rocked by a sudden surge in geopolitical risk as military conflict has erupted in the Middle East. A surprise Israeli strike on Iran, followed by massive Iranian retaliation, has sent shockwaves through stocks, commodities, and currencies, triggering an extremely bearish sentiment across the board. The CBOE Volatility Index, or VIX, is surging, signaling that investors expect wild price swings in the days ahead. Equities around the world have tumbled, with European stocks leading the decline and US futures pointing to a sharply negative open. At the center of today's turmoil is the escalating conflict between Israel and Iran. With Iranian missile strikes on major Israeli cities and warnings of further retaliation, investors are growing fearful of a wider regional war that could disrupt global markets even further. Energy is one of the few sectors in the green, as oil prices surge on concerns about disruptions in the Strait of Hormuz, a vital artery for global energy supplies. Major oil producers like ExxonMobil and Chevron are likely to benefit from this sudden price jump. Defense stocks are also rallying amid expectations of increased military spending and a renewed focus on advanced weapon systems, such as drones and missile defense. In contrast, airlines and travel stocks are under heavy pressure as soaring fuel prices and restricted airspace threaten to squeeze margins and disrupt operations. A new dynamic is unfolding in the safe haven asset space. Gold is seeing massive inflows and is now being described by some analysts as the new risk-free asset, supplanting traditional favorites like the US dollar and treasury bonds. Notably, concerns are building over the long-term safety of government debt, with prominent investors warning that the Federal Reserve may be forced to resume aggressive money printing if yields spike towards 6%. Compounding these risks are political tremors in the United States, where the Trump administration's unpredictable approach is adding another layer of uncertainty. Recent developments include the approval of a major steel merger and reports of President Trump's substantial personal income from cryptocurrency ventures, both of which could reshape policy and market dynamics in the weeks to come. Meanwhile, the ongoing tech rivalry with China is intensifying as Taiwan moves to restrict exports to major Chinese firms, a major headwind for semiconductor stocks. Underlying all of this are existing cracks in the global economy, ballooning corporate debt, concerns about central bank policy, and company-specific challenges for industry heavyweights like Boeing, which is facing fresh scrutiny after a fatal crash. In summary, markets are bracing for continued turmoil. Investors are urged to focus on defensive assets like energy, defense, and gold, while remaining cautious on sectors most exposed to geopolitical and economic shocks. We'll continue to monitor this evolving story and bring you updates as new developments unfold. Stay vigilant, and thank you for joining us.